Be honest, what's really stopping you from buying a home right now? Down payment, credit, interest rates? Is everything just too overwhelming to even think about or possibly make a decision? Today, I'm breaking down the 6 biggest reasons that stop people from buying and ways that you can overcome them, especially if you're looking to make a move to Indianapolis. And if you're looking to make a move to Indianapolis or in the Indianapolis area, I'm here to help you make a confident decision. Let's start with the big one, lack of savings. Lots of people still go by the myth that you have to have 20% down in order to buy a house. That can be a good thing, but it is absolutely not required. Depending on what type of loan you're getting, you could get into a house with a loan with as little as 0% down if you happen to be a veteran and can use a VA loan. But if not, there's still options. You have an FHA loan, which can get you into a house with as little as 3.5% down. There are also conventional loan options, some of which can qualify you as low as 3% down. Most of them start at 5% down and they can go up from there. Now, the nice thing about the 20% down option is it lowers your monthly payments because you're putting in a lot of money up front. But it doesn't have to be 20%. And it's important that you talk to a lender to see what it is that you can qualify for and what makes the best decision for you financially when it comes to down payment options. So what should you do next from here? Well, I would actually say talk to a lender is your best option. And if you need a lender in the Indianapolis area, I can certainly help you find one of those because you want to map out a savings plan. Okay, you have your number in mind for what it is that you want to put down in your house. Now, what's the plan to get you to that magic number? In my opinion, talking to a lender is probably the most important step number one in this entire process when it comes to buying a house. The second most popular reason that people freeze when it comes to buying a house is credit score. Credit score, well, it just feels personal, doesn't it? But it's not personal. It's just a system. And systems can be improved. Having a low credit score is not a death sentence when it comes to buying a house. It may just mean you need to make some improvements, but low credit scores, depending on what that number is, can still qualify to get a loan for a house. So what can you do next? Well, let's start with credit utilization. Check out your credit cards. How much do you owe on your credit cards? Take that number, put them all together, how much you owe, and divide it by how much your credit limits are on all of your credit cards combined. So total credit usage divided by what your credit limit is on all of those cards gives you a number. Then multiply that number by 100. That gives you a percentage. You want that number to be less than 30%. Ideally, you want it to be less than 10%, but less than 30% would be good enough. If you're not there, well, you need to work on paying those balances down, not continuing to use the card, and your score will get lower. You also want to make sure you're not late on any payments. If that means you have to set up auto pay and maybe all you're paying is the minimum, never a great idea, but if that's what you got to do, you don't want to be late on your payments because that hurts your credit score as well. And the third thing you want to do is to check your credit report. If there's anything that has an error on it, you want to get that disputed and cleaned up as soon as possible. The next thing that stops people from buying a house is the one that's in the headlines, and that's interest rates. Sadly, this is the piece that we as buyers may have the least control over. If you're worried about a particular interest rate, you're worried about the wrong thing. Because when it comes down to it, the rate doesn't matter. What matters most is what your monthly payment is going to be. And that monthly payment includes the principal, the interest, the taxes, and the insurance on your house that you pay every month. Yes, the interest rate controls somewhat what that payment is going to be, but if you're going to put down a decent down payment, then your interest rate or your monthly payment is going to be lower. If you're going to buy a house at a certain price range, higher or lower is going to determine what the monthly payment is going to be on your house. Interest rate doesn't matter as much. So what can you do instead? Well, number one, stop paying attention to the headlines because interest rates in the headlines are not necessarily honest. Number two, there are potential ways to get your interest rate a little lower if that's important to you. Potentially, you could ask for seller credits where the seller of the house might buy down your interest rate a little bit. That can be useful to you. I would recommend that you compare your current situation to what it would be buying. So most likely you're renting if you're watching this video. And if that's the case, how does your current renting situation compare to what it would be if you were buying, knowing that buying a house helps to build up equity and increase your wealth over time, where renting is just money going out the door, helping your landlord to build their wealth? And most importantly, in this particular scenario, don't compare yourself to someone else's. You may have heard of someone else that got a certain interest rate, and their payment was this, payment was that, blah, blah, blah. I've never walked into someone's house and looked around and go, wow, you must have a great interest rate. No one cares. Reason number 4, decision fatigue. This is you, right? You're laying in bed or sitting on your couch watching television, and you're just scrolling on your phone looking at Zillow, homes.com, realtor.com, any of those real estate websites, and you're checking out houses. That can get absolutely overwhelming. You have so many homes that you're looking at. You mark some as your favorites. You think you're going to come back to some. And what you're seeing in photos, I mean, they look nice because photographers do a great job. They are professionals, but it's not the reality of the situation. What you would do next, in my opinion, is go look at a house. Yeah. By this point, hopefully, you've already gotten your pre-approval from a lender. So you're going to look at houses that you know you can afford. Seeing a home in person is always better than looking at the photos online. I can't tell you how many times I've gone through a house and the buyers that I'm with talk about how great the pictures were, but the reality of it wasn't necessarily right. That happens all the time. In addition, there's a big difference between seeing it online, seeing it in person, and deciding in the moment, I really don't need that in a house. Or, wow, I really wish this house had this. And now it starts to make your list of wants and needs in a house become, well, I guess more real. And then with your list of wants and needs, pick 2 or 3. You don't need a huge list because, again, the decision fatigue sets in when you have too many characteristics you're looking for in a house. Pick 2 or 3 absolute must-haves, and those are the things you want to be looking for when you're looking online or hopefully going to look in person. And then once you start actually going out to look at houses, do yourself a favor. Don't go look at 7, 8, 9 houses in a day. Are there situations where that is right? Yes, because like if you're looking way out of town, maybe in a different state, you're only there for a minimum amount of time. It does help to see a lot. I get that. But if you're staying somewhat local to you, limit yourself to maybe 2 or 3 home visits in a day because it can get overwhelming again by all the decisions you have to make by seeing all of the different homes and trying to decide which one was the best. This one's kind of sneaky because people think that they need to have everything in order. They need to have their pre-approval. They need to have their down payment. They need to have their list together. They need to know exactly what they want in a house. They need to know exactly where they need to be. And they ultimately give themselves paralysis by analysis. And that just isn't the case. What I recommend to people and what you can do is to reach out to a realtor and sit down and have a conversation. I do this with all of my new buyers. And we have a conversation for, I don't know, about 45 minutes to an hour where I lay out everything that's involved in the home buying process from start to finish. Honestly, it might even be a little bit more than they need, but I want to make sure they know every step that's going to be involved and reassure them that I'm going to be there to walk them through every step of the way, which is important. You want to start with a simple game plan. As I said earlier in this video, I think step number 1 is to talk to a lender because you want to make sure you can be pre-approved and you want to know what your dollar amount is that you're searching in. From there, it's talk to a realtor, go out, look at some houses, get a feel for what's out there, and get started. Last item, fear of unexpected costs. And this one's real and probably not thought of too much, but people get paralyzed by just the process of buying a house. And then they get to thinking about, oh my gosh, all the things are going to be involved when we buy this house. There's going to be repairs involved. There's going to be homeowner's insurance, possibly HOAs. Maybe you're living in an apartment, you're going to buy a house, and it's like, wow, we're not going to have enough furniture to fill this house. Maybe you're buying a house and you have a newborn baby on the way, and it's like, oh my gosh, we're going to need so much stuff for the baby, or which room's going to be the baby. There's a lot involved when you buy a house. I'm not going to sugarcoat that for you, but there are ways that you can kind of get around that, and here's what I recommend. You're going to want to get a budget set aside for maintenance. On a monthly basis, set aside a few $100s if possible that you can start putting into a fund so that when something comes up later, and inevitably it will, whether you're buying a brand new house or a previously owned house, there's always going to be things. Well, get a savings account set aside that's only going to be used for maintenance on the house. Save yourself a hassle later on. When you buy the house, make sure you have a home inspection. And I tell all of my buyers this, to get a home inspection. Yes, you want to make sure the home is in good condition. There's nothing hidden there that you're missing because you want to be buying a decent house. You want to think of your inspection as your to-do list. When you move into the house, some of the things you may want to address right away, but some things can be put off down the line, and you're going to start saving to get those things addressed at a later time. So what's stopping you from buying a house? Is it savings? Is it interest rates? Is it home fatigue? Is it not knowing where to start? Is it worry about surprise costs? Leave me a comment and give me a number 1 through 6 based on the 6 things that I talked about. And if you're thinking about making a move to Indianapolis or around Indianapolis, reach out and I can help you with a plan. We can talk about timeline, budget, what's all involved with buying a home. We can just lay it all out on the line for you. If you like this video, hit that subscribe button. I do weekly videos about the Indianapolis market and home buying process. And if you want to reach out to me, down in the show notes, there is a link where you can get in touch with me. We can set up a short appointment just to have a quick conversation and get you started. Thanks for watching.